What's up, my fellow traders? Hope you're all having an awesome week. An update here on nat gas, gold, silver, crude oil, and I'm also going to go through copper today, starting with natural gas. Now, yesterday I got this question asked a lot that, Omar, what do you mean by smart money? I know most of you have not heard me talking about this terminology, but just for your information, smart money are the people who are, by the name itself, it tells you they are smart, and they are the people, big investors, institutions, and traders out there, the big whales, I would say, who has the insiders information. They might know where stop loss is, that's why they call smart money. Let's say you have entered right here, you have keep a stop loss here. What they do, they come down, do a liquidity sweep, collect a liquidity, and they just set their order after a liquidity sweep, collect the orders, and then shoots up and push the market higher. And also so that they can get an entry according to the desired price, and that is why they know where the orders are. After hitting stop losses, they can enter at the place they want to. A good example of that, I just want to show you right here. So at this point, let's say the price come down in the area, and the mistake traders do, what they do, the price come in the area, they start buying without looking at the condition. That's why very important to align your stop loss with the ATR, the way I teach you to my students in the course as well, according to a different type of pattern. Doesn't matter if it's a head and shoulder pattern, double bottoms, double top, engulfers, swing high, swing lows. That is how we take the trades, just to at least get a safer stop loss. Now here, if you start buying here, they know that your order has been set somewhere here, your stop loss has been set somewhere here below the zone, and the traders who set very tight stop loss without looking at the ATR, let's say you have entered here, keep your stop loss here, take profit right here. Now you see the price did push up massively, but after hitting so many stop losses, after collecting the liquidity, and also if you see, it also forms a head and shoulder pattern. I know that's not a perfect head and shoulder pattern, but you see left shoulder, head, and liquidity collection, bullish engulfer, and it shoots the price higher. So according to how they want to enter the market, sweep your stop losses, collect liquidity, and then push the price higher. So that is why I always recommend you guys to wait for the patterns to form, wait for the conditions to form. Let's say we have a head and shoulder pattern. In that case, yes, I'll keep my stop loss below somewhere the head of the pattern. In this type of scenario, you know we're going to enter at the right shoulder, at the engulfer. We are totally safe. So that is how we need to be really cautious when we are looking at the market. I hope that clears a bit. It is a very long topic which I might clear in the upcoming podcast at the end of the month. Now coming back here on natural gas. Now if you remember in my yesterday's video, I've said that wait for the price to completely close below with the momentum from this zone. Now we just have one candle that is closed below. For me, if you follow me from a couple of years, you know I normally like to see few candles before I use the zone for my bearish trades. Now looking at the fact we are still below 50 and 20 EMA, I'm totally fine to look for short-term bearish trades until we are completely broken below with a good momentum to take my bearish continuation trades towards the downside. Right now, I've just given you an example about the smart money. So that could be an example of that. So the price is now pushing down, and it is a reversal pattern. Now it doesn't mean that you start buying here, right here. And we also have an inventory report due sometime in 46 minutes at the time when I'm recording this video. So that might give some reaction, and that might help this pattern to form. So we have a left shoulder that has been formed. Then we have a head that could be a possible head if it's not broken below. So for now, we are just preparing ourselves, right? And if we have a push up exactly here, and in that case, I'll mark my termination zone exactly like this and make it a bit more prominent exactly like this. Now for me, for the possible completion of the pattern, I want to see a price to hit this pattern without to close above this pattern, right? If we have that, I have my step number 3 completed. Then I want to see a rejection to this little termination box right here, which will be something like this. Let's make it prominent as well. So I have 2 rejection boxes. So once we have that, and I'm going to take it down to the head of this pattern. Now this whole zone will be my termination zone. So if the price rejected from here successfully, come down, forms a bullish engulfer or a 382 candle, then that will be my entry confirmation. I'll keep my stop loss below the head of this pattern. that will be the completion of head and shoulder pattern, inverse head and shoulder pattern, a bullish reversal pattern. So it is a condition now I'll be looking at as well. This was mentioned yesterday because I couldn't speak properly due to the bad sore throat. That's why I couldn't explain as well. Now today I'm feeling much better. That's why I'm trying to explain you how these patterns work. Now here is my rejection and termination zone. So, and I've also mentioned that I'll be looking for my sell trade as now we are below 50 EMA. So in this scenario, as price just made a new low, if we have, let's say, a push up and price forms a bearish engulfer, I'll be taking a scalp of sell trade, exit, right? Exit with my stop loss as well. So I keep my stop loss there in case the price goes against my direction. I'll come out and look for a next condition. But if I get a condition to sell, I'll still sell using 1 to 2 ATR for my targets, come out and look for the possible next condition. That is why very important to pull the money out of the market. Use your stop loss there. Without stop loss, you just blow up your account. A good example is right here where I've entered, as mentioned yesterday, somewhere here, stop loss is hit, then I ride along in my Fibonacci sell trade, which I've just shown yesterday. Now coming back. So for sell condition, I've just mentioned just for the pullback entry, clear pullback entry. Let's say if the price hit 50 EMA, forms bearish engulfer, go 1 ATR for the targets and come out of the trade. Or 2 ATR if you want to get a better reward to risk ratio. Otherwise, I'll still look for my bullish pattern if we have that. If not, if the price breaks below this low and then it will turn completely bearish. It is still bearish, but as we just have a one candle below the zone, not with a good momentum, let's say we have a one big candle, that is enough for me to call it as a bearish continuation as we have a good momentum from the zone that has been broken. So that is what, with a good momentum, then I'll use this zone for my bearish pullback or bearish aggressive entries or double top entries till the zone below right here. So that is what we need to see and we need to figure out and take our trades with condition because we are investing hard-earned money. We are not going to throw this money just randomly. So make sure you look for the conditions, entry, and always trade with stop loss. Without stop loss, you are just gambling, not trading. Exact same condition now here on Oanda. We are now in the zone, support zone, right? So going back, you see we have a dramatic push up from this area. Right here, I've been waiting for this zone because it was quite below from the other platforms here on Oanda. As now price is now inside the zone again. That is why either we can get a possible push up, bearish engulfer, and price might come back down, form some sort of bullish double bottom pattern here. Otherwise, for here, exactly same I've just mentioned, which is exactly like this, which I'll be looking at. Mark your rejection boxes and mark your zones I've just mentioned. If you are my student, you know how to mark your valid termination zone above and below. So that's what I'll be looking at on all three platforms. And I've already mentioned these zones in my yesterday's video. Feel free to check that out in case you are brand new on this channel. Check the video and mark these zones on your chart so that you know where the zones are at your charts. Here on Nemix, exactly the same zone has been mentioned. Exactly the same. Look for a possible pattern. If we have that, we are good to go for our trades. But for now, we're just looking for bearish trade if we have a pullbacks. If we have no pullbacks, no confirmation, I'm not going to go for a trade. But if you are someone who want to wait, like I mentioned, for the long term, if you want to wait for this pattern to form, wait for that. Once we have this pattern form, only then we'll keep a stop loss below and then we're going to ride along with the trade. Next up, we have gold. So as mentioned yesterday, from this anchor level, we might see some sort of push up, but it is not a valid condition. That could be from the anchor level, price normally retest and push back up again. Once we are broken above this high, I'm going to start to look for my pullback entry bullish only. For now, either I want to see some more pullback to this level that has been mentioned in my yesterday's video, and here I want to see bullish engulfers or double bottom, or I want to see a good bullish engulfer must be below this low with bullish engulfing pattern, a valid bullish engulfing pattern. If we have that, I'm going to go long using 1 ATR for my target, which is $12, and that is enough for your targets. So wait for that. For my pullback entry, either I want to see a break above this high or I want to see a push down, break below this low, and then with a pullback followed by bullish engulfer, I'm going to go long. And you know the exact rules of pullback entry if you are my MMT student. But for now, here on YouTube, you know the condition I've just mentioned. Look for that. Look for the pullback entries. Here on silver, I'm not looking for any buy trades. We might see a push down to the zone below, which is right here, 28.71, that goes to 29.72. Now here, I want to see a price to come down, form some sort of condition like bullish engulfers or double bottom. Only then I'm going to go long. Otherwise, I'm not taking any long trades. For now, if we have a push up, bearish engulfer, I'm gonna go short. Or if we have broken below this low and then a pullback, I'm gonna go short till we are in the zone below I've just mentioned. So buy from here, otherwise I'm not buying. Or if we have broken above dramatically, let's say if gold push the silver up above 50 EMA, only then I'll start to look for the upside and this level I've been mentioning from last couple of videos. Crude oil is pushing up and down. Now that is not head and shoulder pattern. If in case you're wondering, that could be a pattern but not a valid pattern to take your trades, because head and shoulder pattern is a reversal pattern. We need to see a price come down all the way from the level above and then form some sort of pattern, and then we're going to look for the conditions. So for now, price bounced up from the zone we've been mentioning. Let's make the chart a bit clear. So at this point, either I'm just looking at the zone above 85.81 that goes up to 88.24 to take my counter sell trade. So if the price pushes up, it is an only area from where I'll be looking to enter my buy trade. My sell trades with condition like bearish engulfers, a double top entry confirmation, inverted hammers, 382 candles as well, but with a different style of entry. Now for the pullback entry, either this candle turns to be a bullish engulfer, or if the price breaks above this high, and then we have a pullback and bullish engulfers, and keep on taking longs till we are in the zone above to take our counter sell trade. For now, not selling crude oil as long as we are above 50 and 20 EMA and above this zone as well. Sell is only from the zone above I've just mentioned. Lastly, we have copper. Copper has broken below, as you can see, this channel right here, and also made a new low. I've just removed the support area because we don't need that area anymore. For me, my next buying area, it is right here, as you can see, 3.929 that goes up to 4.918. For now, I'm just looking for bearish pullback trades, which can be retest of this channel, bearish engulfer, and keep on taking shots, or a pullback below 50 EMA, bearish engulfer, and keep on taking shots till we are in the zone below, which I've just mentioned. So only taking sell trades, and once we are in the zone, I'm going to look for the bullish engulfers or double bottom entry confirmation. So that is it I'm looking at here on copper. As you can see, the zone below is a level of significance, so that has been used as a level of support and resistance. I might redo the zone in my next upcoming video. Keep an eye on the weekends video where I might do this zone. So for now, have these zones ready and only taking sell trades, as now we are broken below the previous low. Looks like the price is gonna push lower. So that's it for commodities, guys. Hope you're getting value. If yes, hit a like button for me, subscribe if you're new, so that we can all trade together and trade efficiently. Hope you trade green. I'll see you guys in the next one. Have an awesome weekend. Take care.